Hello, everyone. I'm Michael Lytle, Chief Investment Officer for StoneX Wealth Management. Friday's job report had us wondering, is there reason for concern? So when we look at the monthly payroll numbers, we see really a slowing trend, low double-digit numbers, meaning below 100,000 jobs created each month. And then when we look back to revisions in June, we see actually a negative number, the first one since the end of 2020. So again, had us asking, is there reason for concern? The slide you see on your screen now shows the 3-month moving average of payroll growth. And you see off to the right, really just continued weakness headed towards that white line in the middle, which is zero. So stall speed and job growth. If you look to the left, you see various shaded periods. Those would be recessions throughout time. And you really see that we're at similar levels, be it kind of coming into or maybe within or coming out of a recession. So at this point, again, does it make us ask, is there reason for concern? And honestly, the answer is yes. And we're seeing it show up in various areas of the market. So as we flip to the next slide, the first and biggest and most abrupt, if you will, was an increase in rate cut expectations for this year. So we went from somewhere around 2 to just barely below 3 in the course of 24 to 48 hours. So the market's expecting a cut at each of the next 3 meetings. In fact, there's a greater than 100% chance of a cut next week, which essentially means the market's expecting or projecting 30 basis points instead of 25. The Fed doesn't usually move that way, but it is an indication of what the market thinks. Interestingly, we look in the interest rate market and Treasury yields, we see similar responses. So short rates coming down, but we also see long rates coming down. And that hasn't been the way it has acted most of this year. Short rates have been falling, long rates have been stubborn, and in some parts of the world even rising as investors were concerned about inflation. That's different than what we see here. So it could be that the market is reading into these job numbers and saying, hey, we're headed towards a recession, and that's more concerning, so a flight to quality. Where we're not really seeing it is in the equity markets yet. We keep making new highs. Even Friday after this report, there was an intraday new high on the S&P 500. It did settle back during the day, but not large, not a big decline, but did end up making a new high at the closing price on Friday. So just think this is an interesting mix of what we see. This week will be impactful because the Fed really is in a bind between what we see in the employment market and what we may see in the inflation market. It has been stubborn. Will that continue? We'll see this Wednesday and Thursday in particular. And then we'll come back to you next week and give you some thoughts on that. So with that, thank you for your time.